For any auditor, cash is really where the action is. Think about it. It's the lifeblood of a company, right? But it's also the easiest asset to, well, misuse. So today, we're going to visually break down exactly how auditors tackle this, how they go from just identifying a risk to getting undeniable proof. All right, let's dive in. Okay, take a look at this. This flowchart is basically our GPS for the entire audit process. It lays out the exact logical path an auditor follows, from the very top all the way to the bottom. We're going to walk through it together, piece by piece, so you can see how it all connects. So here's our game plan. We'll start with the big picture, then we'll get into the real heart of any audit, identifying risks and what we call assertions. After that, we'll look at the actual procedures auditors use out in the field. And we'll wrap up with the ultimate proof, the single best piece of evidence an auditor can get their hands on. So let's set the stage. Why all this focus on cash? Well, like I said, it's what keeps a company running, but it's also incredibly vulnerable. So an auditor's job, at its core, is to provide assurance, to make sure that the cash number you see on the financial statements is solid and reliable. And this right here, this is the official objective, and it gets straight to the point. It's really a two-part mission. First, you've got to understand what could possibly go wrong. Those are the risks. And second, you have to know how to find the right kind of proof, the evidence, to make sure it hasn't. Every great audit doesn't start with numbers, it starts with questions. What are we actually worried about here? And this is where we get into these two concepts, risks and assertions, which are the absolute foundation of this whole process. As you can see on our roadmap, the whole thing kicks off right at the top. Before an auditor even thinks about touching a spreadsheet, their first job is to think critically. Think about the risks tied to cash and the specific claims or assertions that the company's management is making. So what in the world is an assertion? It sounds way more complicated than it is. Basically, when a company says on its balance sheet, we have $10 million in cash, they're actually making a bunch of claims all at once. They're claiming that cash really exists, that they own it, that the amount is spot on, and that they've included all the cash they're supposed to. The auditor's job, it's to check every single one of those claims. Now, to get a handle on all these claims, auditors use a really simple but powerful little framework. Our roadmap summarizes it with the acronym CARE. You can think of it as the auditor's 4-point checklist for cash. Let's break down what each letter stands for. First up, C is for completeness. The key question here is pretty simple. Is all the cash that should be recorded actually recorded? Auditors are on the lookout for things like secret bank accounts or cash sales that were never put in the books. It's all about what might be missing. Next, we have A for accuracy. This one's pretty straightforward. Is the balance correct? Down to the penny? Here, auditors are looking for simple human errors, maybe mistake in converting foreign currency, or just any slip-up in recording checks or deposits that would make the final number wrong. R stands for rights and obligations. Now, this one is critical. It asks the question, does the company truly have the right to this cash? For example, maybe some of that cash is being held for a client, or maybe it's locked down as collateral for a loan. Just because the company's name is on the bank account doesn't mean they have total control over it. And finally, we have E for existence. This is maybe the most fundamental question of all. Does the cash they're reporting on the books actually exist in a real bank account somewhere? This is the check that protects against outright fraud, where a company might just invent a cash balance to look healthier than it really is. Okay, so we have our CAR checklist. We know what we need to test, but how do we actually test it? Well, that brings us to the next stage of our roadmap, the audit procedures themselves. This is where theory turns into action. And if you look back at our roadmap, you can see the logic perfectly. See those arrows? They flow right from our CARE assertions directly into this next box, audit procedures. Every procedure, every action is designed specifically to test one of those claims we just talked about. And here are some of the key moves. Physically counting the petty cash in the cash box, that's a direct test for its existence. Going through the company's bank reconciliation, matching their books to the bank statement, that's a fantastic test for accuracy. And reading through loan agreements can tell you if there are any restrictions on the cash, which goes right to rights and obligations. So the auditor is doing all this stuff. They're gathering pieces of the puzzle. But here's the thing. Not all evidence is created equal. Counting petty cash is good, but it's all internal. Testing a report prepared by the client is also good, but you're still relying on their documents. So that raises the big question. What's the most powerful, most trustworthy evidence an auditor can possibly get their hands on? And that brings us to the final, and I'd say most important piece of this entire puzzle. We're talking about the gold standard of audit evidence when it comes to cash, the bank confirmation. Our roadmap shows this is exactly where we've been heading the whole time. The whole process, thinking about risks, understanding the assertions, doing all the procedures, it's all designed to funnel down to this one incredibly powerful document. So what makes it so powerful? It's really three things. First, and this is the big one, it's external. The evidence comes directly from the bank, straight to the auditor. The client never even touches it. That makes it unbelievably reliable. Second, the format is standardized, so there's no confusion. And third, the auditor controls the whole process, from sending it out to getting it back. It hits existence, accuracy, and rates and obligations all in one shot. So let me leave you with this one question, just to really lock in the main takeaway here. If you were the auditor and you only had time or budget to do one single test on a company's cash, which one would you pick? After everything we've just walked through, the answer should be crystal clear. You'd go for the bank confirmation. It is without a doubt the most efficient and powerful proof you can possibly get. Thanks for joining me.